Hi everyone, welcome in this video where I want to explain you different things actually. The mistakes that you can do in Fibonacci trading and how to solve these problems and by understanding better what's Fibonacci trading. Because we tend many times to, for example, on an uptrend, the typical trader that is learning to trade pullbacks with Fibonacci, which is great, but will trace its Fibonacci everywhere. Okay, on each higher low, higher highs, and on each time, and sometimes it goes deeper, sometimes not really understanding why, but just tracing the Fibonacci a bit everywhere, and then not understanding why sometimes there are a lot of losses, is because the Fibonacci tracement is only needed at the new beginning of a trend, okay? If the Fibonacci is traced, sorry for the noise, a second, I just need to replace my microphone. If a Fibonacci is traced, the trend that is according to this Fibonacci retracement needs to be complete. Price is cycles, okay? And in these cycles, we need to make it to an end. So if you just add a retracement on 618 and then a continuation to the next high, okay, the fact that you have a next potential higher low created doesn't mean it's the end of this Fibonacci. So how can we look at where does it end? And this is what I will try to explain you. So you want to always look for a low being broken and a high being broken in the same time, in the same swing for you to trace a Fibonacci. So for example, here we had lows, got broken, and then what did we do here? We broke highs. So that's where you want to trace your Fibonacci retracement. Price tends to retrace sometime early, sometime late to situations and then retrace. Here we see that we go to 618 and I will explain you something about 618 and entry setups to get better ones and ideally avoid the lost one, but all this should be through documentations, okay, and backtesting data. Once it goes to 618, it makes a continuation, and this is not where the Fibonacci should be deleted. Once you reach here, you shouldn't delete your Fibonacci, but instead you should look at what's going on in the price. And here we see that we are reaching 1.618 and we are continuing to make higher highs, higher lows, higher highs, higher lows. There is nothing that is changed in the structure until that we go at the 2618. So we didn't reach it fully, but that's where we are breaking the lows here, okay? And that's only when you should figure out that something new is about to happen. If it's on the reverse side, potentially, so you will take the high and then you will see when did we break the low. So we broke the low here. When did the low happen since we broke that last low? It was here. So then you will trace your Fibonacci like so and not like this, because this low broke this low, not this one. Okay, so this is very important also situation. And then you can see that price went 2.5 and then did its thing, deeper retracement, and then went to 618 until we actually, to low. So this is 0. And then until we actually reversed because we had a higher time frame retracement. This is why also I really advise you to not be too greedy, but when you aim for something with a Fibonacci, always aim for the low, like here, or the high. It's already 1.6 R, it's very good, but to aim for things like this always requires so much more, such as higher time frame retracement and analysis and levels. Then if you want to be stuck at one time frame to make everything easier, just look for retracement at 618 or 0.5, depending of what you want, to a TP at high or low. Okay. The second thing that there is a mistake is that many people, when they don't know enough what structure looks like, will just trace their Fibonacci and put a limit order. Okay, put a limit order and train their brain to just let it, which it's good, but for many, when losses arrive, it will be just very difficult. So one thing you should do is instead put an alert at the 618 point and make sure that of these two things, that price has been touching at the 0.618 and closed, so for a bearish situation, below the line of 618. If it did, then you can put a limit order again at 618 because there is a big chance around that area only on a lower time frame. And I'm saying this with assurance because I've documented this a long time ago. Okay, so on higher time frame, on lower time frame, it tends to retest it and you can get a good entry, but only when you got the first test. So at the second test, you see we get touched, and then you are able to get the trade good. So one thing also to avoid losses, because on lower time frame you have higher chance to lose, obviously, because you take sometimes trades based on reaction and emotion. You want to look at a good break-even point. If you entered at the 618 point, the best way to secure, quote unquote, even though break-even is not really a secure point, it's just mentally. But if you want to secure your stop loss to a point where you will not lose money, wait for price to reach 382, okay? This is the Fibonacci, you can just take a screenshot, settings. Once you reach 382, or if you do reverse like me, it's 618, this is 382. It's no problem, it doesn't change shit. It's the same numbers. You put break even, because once you arrive at an entry of 618, which is the deep retracement, there is very low chance of you reaching back this area, unless it's something wrong, right? So it will not go to TP. If it go and retest there later, is usually that you had a wrong pullback. Let's see if we could find a moment where it failed. Let me check. We have, for example, here we break lows and we break highs. So logically you will be like, okay, I go for a bullish sell-up here, okay? Here you will see that price, the candle touched 618 and then reject it and close above. So then you will take your second entry limit here and always put your stop loss at the low. And you see that we have a retracement, so it goes close to stop loss. You most likely have sweat until you arrive at this point. And at this point, you secured that you can put break even. And as you can see, price tried to retry the pullback, but the thing is that it retried most likely 0.5. And this is because of the middle way. The 0.5 is the one that gets tested the most, but the deeper retracement is unlikely to get retested once it's been doing its thing around there. Don't trust me on that blindly, just document and look at it. And sometimes when it touches your break-even point, it usually means that you have a wrong sell-up. Okay, so I think that's pretty much it. Let's see if we can find another example. We broke lows here. You see here we broke a low. And then we have a high, and I wanted to show you here. Let's see. We close above the 618, so then you can open your entry on the limit order, and then you see put break even here, and you will have got your TP. I would have really wished to show an example where you shouldn't take a trade, but unfortunately I'm not seeing it right now. Let's see if we break a low here and we break a high here, and we don't have any retracement. One other thing I wanted to say that many people forget here, we break a low here and we break highs here, is, oh yeah, this is very major thing. So we have a swing here, you see, that breaks the low and that breaks the high. Sorry if I'm not really organized, I don't have an editor or anything, but take it as someone who has experience in the market, 11 years of the market, and wants to share knowledge about a thing that I love the most, which is Fibonacci and pullbacks. So we do have this swing that makes exactly what we want. It breaks low here and it breaks a high here. And then price just continue to go above and do its thing even until 2618. Logically, you will think, okay, I'll just take off this Fibonacci. The thing is that price is cycle. And if the cycle has not been fulfilled, it will come back at one point or another. It never lets things in just hanging like this. At some point, it comes back to something. And mostly when it comes to 618. So the main mistake here is that many people will take off and go for the next trade and the next Fibonacci retracement. And that's where you have people who complicated things on trading and call this buy-side liquidity, sell-side liquidity, where actually it's just price going back to a point of the perfect number, 618, because we are dealing with number. And it's just that it was forgotten and we think we get trapped. But there is no trap here. You could technically trade this if you wanted to, if you like it in different ways. But here, you should let these levels, if you don't want to let the fib, at least let the 618 as a level, sorry about this, of untouched, and you will see that it will become a place of interest. So here you can see we tried, unfortunately no second try, but again, document and see what you rather like. I like the second try of 618. If I don't get it, it's no problem. But this is also a main mistake, that for your bias, the Fibonacci is just not a tool that you throw and trace everywhere. It's things that you keep for main key levels of support and resistance and continuations of trend. I hope this was helpful. If you want more information, there is my free course. I also make you a program that is paid, that is pretty cheap, where you get a Discord and the program. And yeah, this is if you want to support my work, but this is not mandatory at all. On the free course, you can see all about my strategy. And on the videos on YouTube, I'm trying to give you different perspective, but always on the same subject, which is pullbacks, Fibonacci's, and levels. Until then, I'll see you on the next video.